Dudes, ladies, guys, everyone. Here's the thing. Heath, are you being serious right now? Because I'm being serious right now.
I'm dead serious.
All right, I need serious Heath. This is serious Sid.
I'm serious. I'm ready.
All right, because, man, here's the thing. I got to tell you. I got to tell the people listening. It's a post-COVID world.
Lots has changed.
The world looks different today. And the agency has to stay relevant, has to stay competitive, has to be a little different.
Yeah, I think we have to stay ahead of the game. We have to stay ahead of what's coming. We have to know what's next.
So how do we do that?
We got to be a connected agency.
Ooh, what does that mean?
I don't know. We got to get into it, though.
Oh, let's go, baby.
Welcome to the VIP podcast.
Season 3.
Let's go.
Welcome back to another episode of the Vertafore Insurance Podcast. We have with us today a very special guest who is going to unwrap how you can weaponize and leverage the data that sits inside your systems. This stuff is the jet fuel. You should be using it. We're talking all this month about how to really take things to the next level. And Andrew Filar is going to show you how to weaponize your data, specifically in the marketing and sales side of things. He is the president of Peachy Insurance, a personal lines shop, Allstate agency in Georgia that is now a $36 million agency. We're going to get into how he grew it so quickly over the last 5 years. And we're going to dig into his marketing service, Next Call Club, which is really interesting. He's actually templated what he did himself on the agency side. So he's going to kind of share some secret sauce here, which is cool. But before we get into things, Heath, how are you today?
Man, I am good. I am in Little Rock, which is weird. I'm not sitting next to you, so I'm not happy. I like sitting next to you, especially when we have matching shirts on.
I know. It's weird. It is weird. But you got the black background, you got the mic, you got the shirt, you got the haircut. I feel like there's a fade. Is there a fade going on?
There is a fade going on. If you can't tell, I'm washed out like Edward Cullen right now. But, at least I'm here, and I'm excited to be here with Andrew. Pumped to hear about what he's got going on, especially when you mentioned some of those things just now. And I got to pull curtain back, too, here, audience. I've never met this guy before in my life right now, so I get to meet him with you at the same time, audience. So I am super excited. Sid, thank you so much for giving me the opportunity to be here front row. And I just can't wait to be color commentary on this. I'm excited.
Sweet. Well, without further ado, Andrew, how are you, man?
I'm doing great. Thanks so much for having me. And Sid, I know we talked last week. Keith, great to meet you. I think I like your gray shirt. Thought the black shirt was great too. But
yeah. So another pullback curtain. I had to change clothes right here in the middle of the podcast. So I had a black shirt on. Now I've got a gray one. Thanks for calling me out there, Andrew. This is awesome.
The least I could do.
Listen,
yeah, dude.
We make sure the audience has, the best wardrobe that Heath Sharon has at his disposal. All right.
That's right.
We're not messing around. Cool. Well, Andrew, tell us a little bit about, maybe start with Peachy Insurance. Give us the story on, why you got into insurance, why you became an Allstate agency. Most people don't wake up in the morning and say, I want to be an insurance agent. So walk us through it.
Happy to. So, I'm 32 years old. I've been in insurance now over a decade.
My God, that's crazy. This kid, a $36 million agency, and you're 32 years old? I didn't ask you that before.
Yeah, so I'm 32, and I've been doing insurance over 10 years now, which I can now say a decade, right? Sounds fancier, sounds more legit. But yeah, I think my journey into insurance, the more I think about it, the more it makes sense. But I did not set out to get into insurance. I went off to college. I was not a great student in high school, just knew I didn't want to get a job and face the real world. So I went off to college and kind of just wandered aimlessly in college for 3 years and was set to graduate.
Don't we all?
Early somehow. Don't ask me how I was set to graduate early, but I was. And I remember they told me I needed to apply for graduation, and I had kind of an existential crisis and said, oh my God, I can't graduate. I'm not ready for that. So I went in, I changed my major, later added a second major, and added 2 years on to my college tenure and experience.
Okay. So the ironic part about this is most people have their midlife crisis in their 40s.
Yes.
You had yours in your 20s, which really explains the success that you've had thus far. So for a guy who's like, I don't know about college and whatnot, I'd say that's pretty impressive.
Yeah,
I think back to Tommy Boy when they say it's probably too old for you, that reference, but a lot of people go to school for 7 years. Yeah, they're called doctors. But I love that you went back and added more years. I was trying to get out as quickly as possible, so it's cool. I want to hear more of how this unfolded.
Yeah, the reality is that I realized I had not had nearly enough fun in college. I was working a lot, and I was like, I've not had nearly enough fun. I can't go out into the world now. So when I changed my major, I changed to finance. I've always had an affinity towards numbers, and I thought that compared to any other business degree, it probably would look better on a resume. Again, no real direction. I was just like, look, give me something that's gonna look good. And I knew I didn't want to work in finance. I was in Southwest Florida. There was a lot of financial planning firms with all kind of like the retirees that moved down there. And I knew I needed, a quote unquote like real job. And I needed something in an office to kind of start padding my resume. I was serving tables at a local country club. It was awesome. The money was great. The environment was great. I mean, talk about serving members of a club who have a guaranteed 20% gratuity, where the average plate is like $30 and they have a minimum spend, right? So you'd work seasonally, a couple months a year. You'd work a ton of hours during season, and then you'd have summers off. And so it was like a college kid's dream. Yeah. But I knew I had to do something different, and I had a buddy who was working at State Farm, and he said, hey, my boss is hiring. I think you'd be good at this. And so I took an interview, and basically the job was you got paid $1,000 a month, and you cold called businesses, and your goal was to get 3 to 5 businesses a day to allow you the opportunity to quote their commercial auto insurance. And so that's what I did for 6 or 7 months, and hated it, and it sucked. And I'd make 400 or 500 calls a day, I'd get traction. And honestly, I'm surprised I didn't get fired, probably because the guy was paying me $1,000 a month. So it's like you sell one thing in 6 months, they're probably ROI positive on it if you get a fleet of vehicles. But eventually got my licenses, graduated college, apprehensively, graduated college and got out into the real world. And when I got my licenses, I was able to start working personal lines, and more specifically to work what everyone referred to as like the internet leads. Oh, when you work the internet leads, like it gets so much easier. And so I remember getting in there. It was like my first day on internet leads, and I was making calls, and it was so easy. I was like, this is so easy compared to calling a business and getting past the gatekeeper. And now all I have to do is just kind of confirm information and convince them to talk to me for a few minutes. So, just to kind of fast forward, I did that for a couple of years, sold a bunch as, a producer. And then I moved over to a large captive agency where I basically took them from an inbound sales program to an outbound sales program, completely flipped it around. It took me about 2-3 years to do that, but had a lot of success when I did it. And then, in 2018 had the opportunity to, open an Allstate agency scratch. And it was a great opportunity because I'm not sure if the listeners all know about some of these incentive contracts. If you're a captive agent, is sometimes they'll pay you 300% commission, on a policy in those first couple months. And so if you already have a process, if you already have the way of doing things, and you can start day one with 8, 9, 10 salespeople, you can really make a lot of money quickly. And that's what we did. And so in July of 2018, I had moved up to Atlanta, and we started on day one with 8 salespeople and just hit the ground running. And I don't think we ever wrote less than, $250,000 in production in a month.
Oh,
I think that
gosh.
was our lowest month, and that was our first month, and we've never looked back. And then over the last 5.5 years, have scaled it from 0 to 36 million, and about 9 million of that was done through small strategic acquisitions. Talking $1.5-2 million books, when usually it's somebody who's retiring and maybe the book is a little bit beat up. It's what my banker calls the scratch and dent special. Nobody wants it. We'll take it and kind of turn it around. But 27 million of that 36 has been done organically using outbound callers and leads generated from the internet.
Crazy. That's insane.
That is absolutely crazy.
$27 million.
So one thing I gotta have you brag on a little bit. I see this ink thing behind you.
Yeah.
Tell me a little bit about that, or the audience, I should say,
Sure.
those that aren't watching. Tell me about that.
So the Inc. 5000 is the fastest 5,000 private company or fastest growing private companies in the country. Probably a better label for it is the fastest 5,000 private or fastest growing private companies that submit to the Inc. 5000. But we put it in there because we had seen people posting about it on social or LinkedIn, and usually it's a tech company or an advertising company. And I don't know who it was, but somebody said, why don't we throw it in there? Let's just see what we got, because we had felt pretty good about our growth. And I think generally the qualifications are that you have to have at least 100% growth, in revenue 2 years in a row or something like that, and eclipse $1 million in revenue. I think so. We put it in, and we actually wound up in like the top, 40% or something like that. So we thought
Wow.
that it was a long shot even for us to make it. But then when we got in, I think we were like 2,300 or 2,200 or something out of 5,000. So we're pretty proud about that. And there are some other insurance companies on it. There's not a lot of insurance companies on it, much less insurance agencies. And when they're there, they tend to be a large, kind of large account commercial focused agency. So as a property and casualty insurance agency, much less under a captive contract, we're pretty proud of that.
That's
Yeah,
impressive.
you should be.
Okay, so let's walk it back to the inbound outbound sales model change, because that
Sure.
it feels like you cut your teeth in insurance and you got into the captive agency, you helped them make this huge pivot. What were some of the challenges that you ran into in helping them evolve their sales model?
So I think there's a few things, right? There's I didn't own the agency, right? So I was working for somebody who owned their own agency who had always done inbound. And I think the general theme, right, which I agree with and I think is true, is that it's always easier to sell something when somebody calls you than when you call them, right? And that makes sense because they have time, they're picking up the phone, they're raising their hand. And when you call somebody else, 99% of the time, unless you have a scheduled time, you're interrupting them, you're interrupting their day. And so
Yep.
it's easier to sell when somebody calls you. However, it tends to be significantly more expensive to generate an inbound lead than an outbound lead. It tends to be hard to scale, especially if you are in a singular state or a singular market or under with one company to write under. It can be very, very hard to get the type of traction that you need. And so where the need came from coming, to transition from inbound to outbound really wasn't about the cost or the economics. It was just so that they were having a lot of success with inbound. They just could not get enough. They were writing maybe 200 to 250 policies a month, and they needed to be around 500 or 600. And really the only way to bridge that gap, especially considering that this was an Allstate agency, the niche was so tight, the underwriting guidelines were so tight. We're talking 2015, 2016 in Florida. So the guidelines were tight. And so really the way that I came in and just said, look, there's a very specific target customer for this agency. And right now, there's a lot of direct mail being sent out trying to get people to call in. You're getting a lot of people who don't fit the niche, but you're having to hit them because you need the volume. At the time, running your own SEO, like paid search or click to call wasn't even a thing at this point. But running your own paid search was so hard because the average bid on an insurance keyword, I think, was like $45 or $50. So this is, it's come down, but it's still pretty high. And so we decided that we were going to do a bunch of outbound, and a lot of that was going to be through buying internet leads. And one of the things I loved about it was I said, look, you can get extremely targeted, you can get extremely granular on where you're buying, what type of consumer you're buying, and when you're buying them. And if you get too many, you can turn it off, you can turn it on. You have your finger on the dial. And so part of it was just getting the buy-in from the ownership and the leadership, especially considering that's not how they had built this agency that was already extremely large. I think that was actually harder, I think, than getting the team on board. Though getting the team on board was pretty tough too. I inherited 15 salespeople on this team. I think I'm like 23 or 24 years old at the time. I've never had any management experience, and I'm thrown into this position as a sales manager. And now I have to tell all these people who are more experienced than me, older than me, probably know more about insurance than I do, probably know more about, selling in general than I do, trying to get them to pick up the phone and make outbound calls, which is something they're not comfortable with. It's something they haven't been trained on. It's not something that they're used to doing. And so getting the buy-in was incredibly tough. And, I had to bring 15 people around on this. And I think I'll just kind of give a little spoiler alert. 18 months in the future, when we really started crushing it, I had 2 of those 15 people left. I had to turn over almost the entire team. We didn't fire everybody. Some people we moved into different types of roles that were a better fit for their skill set, but they weren't, their skill set or their ability or their will to do it was not a fit with what we needed at the time. And so the way that I got it going right in the short term was we used outbound callers as kind of a bridge. And so we knew that people were used to picking up the phone, kind of waiting for the phone to ring. They didn't want to pick up the phone and make 200, 300, 400 outbound calls a day. So what we were doing is we were bringing in new unlicensed people, and while they were getting licensed, I would work with them directly to make the outbound calls, get them teed up and transferred to a sales agent, and then keep rolling. And so that's what we did. And we kind of created this machine. Leads come in, callers call them, get them on the phone, transfer to a salesperson, and keep going. And over time, we perfected that. And then as we graduated those outbound callers into sales agents, they got on the phone and were just used to making outbound calls. And so basically the idea was get buy-in from 1 or 2 people, then the next 2 people. And then before you know it, you've got a few people who are the odd man out. And it's like, either get on board or let's talk about how we can set you up to have a better use of your skill set and your desire of what you want to do. And so that's how we did it. Yeah. And when I opened my agency, I took that exact model with leads and callers and hit it day one.
I got a couple of questions.
Sure.
Oh, you go, ladies first. Go ahead.
No, you go, man. I could say you're like jumping at your seat there. So
oh yeah, the sales guy's coming out of me for a minute. But let me ask you a couple of questions. One, I don't even know where to begin. So the first question I would ask you would be, as it opposed, okay, when you were talking about setting up the process and getting people comfortable with this, did you start with scripting with them? And did you work with them on that, or was it more of you give them a bullet point list and then they come up with their script? How'd that work for you, first off? And then I got another one.
Sure. So we're actually not big fans of scripts, and so what we try to do is we try to keep it very, very simple for the outbound callers. And what we always tell people is the hardest part about selling insurance, at least in the property and casualty space, I know that in the commercial space, a total different world, is that getting the person to agree to have a conversation with you is 80% of the battle. And so what we do is we try to teach people to say, look, what we're here to do is teach you how to be clear, brief, and interesting in 60 seconds or less. And so that's what we're going to try to teach people to do. And so we'll give them a general kind of script or talk path or something like that. But we always tell them, look, try it for the first couple, get it down, and then make it your own. And then we address objections as we go. But we don't want them to have it too scripted or too locked in, because there's a lot of variables that come up. One is we don't want them actually having a long conversation. Ideally, they're having a 2-minute conversation before we get it to the sales agent. However, sometimes there's no sales agents available, and so they need to stall. And so we have callers, through Next Call Club, who will stall for 20 minutes sometimes waiting for an agent to get available for the agency that they're working with, right? And that just becomes, how do you build rapport with somebody and just have a conversation with somebody about their problems without getting specific about insurance at all? And so what we try to do is we try to teach people, how can you just make small talk with somebody and be interesting in a way where you can listen, acknowledge, empathize, and just keep moving. But again, never talk about insurance, because we don't want them asking any specific questions, because these are not licensed individuals. And so we don't script, but we do give people kind of like word tracks or talk paths to kind of start with, but we do not require people to stick to it like they're a train on a rail, if that makes sense.
Is there any, putting you on the spot, could you show us one right now with the audience?
Yeah, it's really not that scientific. We can
So if hello,
Hey, is this Keith?
Yeah, this is Heath.
Hey, Keith, this is Andrew with Allstate. How are you today?
I'm doing well.
Well, good. Glad to hear it. I'm just giving you a call because I had an auto quote here prepared for your 2017 Nissan and your 2022 Mercedes. Are those the only vehicles on the policy?
As of right now, yeah.
Oh, perfect. And I've got 2 drivers here. I've got, you and Sydney. Any other drivers that we need to add to the policy?
We need to take Sydney off. We can talk about that later.
Okay, perfect. No problem. I'm actually putting that in my notes now. And so something that's really important to note is that we work in teams here. So I've actually got my senior agent already on the line. They're going to go ahead and take it from here. They're going to make it quick, easy, and efficient for you. They're just going to ask some questions. So if there's any types of, changes in price, we can avoid all that now.
Sounds good.
And then the senior agent would jump in and I'd drop right off.
Wow. I thought that was good. And I think the audience could be able to relate to that and see how easy that was. What do you think, Sid? You'd buy from that guy, right?
I was slow clapping the heck out of that. Absolutely.
Yeah, right?
And here's the thing, is that most times there's an objection of some type, right? Like, it usually isn't just like, oh, thank you so much for calling. Let me get my declaration page so we can go through it together, right? Like, not that anybody actually has like a physical declaration page anymore. But the point is that we teach people to expect an objection 9 out of 10 times. And what we would do in that case, Keith, is, and I appreciate you for not giving me an objection and making it hard on me on the spot, right? So I appreciate that. That was a bro move. So
right, I got you.
Well, I feel like whoa, and I'm off the policy, and now I'm like,
and now me and Keith are just broing out talking about insurance.
That's right.
So, but what we would do is we teach people a framework of, look, do 3 things when someone gives you an objection: acknowledge their objection, empathize with their objection, and then overcome the objection, right? And the idea is just to let them know, is like, look, again, it's going to be quick, easy, and we're going to make it convenient for you. You've done 90% of the work. Let's just get this off your plate.
I noticed that in your talk track, you didn't give any, there almost wasn't really a conversation. It almost felt like you guys were on the second or third call by the time, 10 seconds in. If I was Heath, I probably wouldn't have even thought to, like, what do I say? I mean, I would have thought, oh, this must be my insurance agent. They must be calling me to.
Yeah, when you mentioned the Nissan, the BMW,
right? They know my information.
You forgot the Land Rover and the Lamborghini, but that's okay. Yeah. I mean, like, you already knew, and so I was like, this guy's a genie. Like, he already knows. But I thought that was awesome.
Okay, wait. So this though, you go. Yeah, I was gonna say this kind of begs the question. Obviously, you're prepping the salespeople with data beforehand, which goes to the data-driven approach. It's less about the talk track and the objections and more about having the right information at their fingertips.
Absolutely. And so whether you're buying internet leads from a company that generates them, like, like a Quote Wizard or an EverQuote or a Smart Financial, right? Because there's all these companies that, have all these landing pages, or running Google ads, or they're running Facebook ads, or they're sending email ads, right? They're driving people to a form, generally speaking, because they think, hey, get a comparison, and there's this idea that, like, they think they're going to get a rate and buy it online, right? This quote to bind in an insurance marketplace online. And I think a lot of times it's actually just a lead generator. And whether you're doing that yourself or buying a lead from one of these lead generators, it's really important to understand the journey that the customer or the prospect is going through. And I think something that we talk about a lot with our outbound callers and the agents that are buying the leads or generating the leads themselves is, you need to understand, did this customer search or did they stumble? Because their reaction is going to be very different. So if Keith went out to Google and typed in, auto insurance, whatever, and clicked an ad, and then you get a call, you kind of expect that, right? But if you were on like MSN.com, I think is still like the default homepage if you open like a Microsoft browser, which I don't know anyone who uses a Microsoft browser, but a lot of people apparently still do. And you might see an article about insurance, and that article about insurance is really just an ad. And so somebody clicks it, and then they generate a lead, and then all of a sudden they're getting phone calls. And so somebody who has stumbled and then filled out a form is probably going to react a little bit differently than somebody who went out and searched. So, of course, understanding that intent, how they went through the funnel, what questions were asked on the form, but you also have to put your mind in the head of that. You have to put your head in. You have to align with the mind of the consumer in the sense that, look, you're probably not the only one calling them. It's possible they've filled out a number of forms. If you are calling them multiple times in one day and using a local ID, which, when it first came out was amazing. It's like if you match their area code, it was almost a guaranteed answer. Now I think it actually indicates like this is probably spam or this is probably a sales call. And so we've gone away from that. But the other thing that it does is that if you're changing your number every single time you call to that consumer, do they think this is somebody who's called me 5 times today, or do they think it's 5 different people calling them? And so you have to get inside the mind of this consumer and understand what they're going through. And it doesn't matter whether you're generating that lead yourself or buying that lead from somebody else. You need to understand the journey that they're going through, because that's going to make it that much easier when you get on the call. It really doesn't become about so much of what you say or the script. It's really just about completing the journey that they're already on and making sure that they don't feel like they have to answer the same questions they did before, that they're like, and that's why I say I'm confirming, not asking. Because if you've already put the cars in and I say, Heath, what cars do you have? You're like, I already put this in online. Like, why are you asking me again? Because now you're thinking, they're going to be asking me a ton of crap that I already put in online. This is not going to be easy or quick or convenient at all.
So as you're taking this in, where are you putting this data? Is it going into a CRM? Is it going into an Allstate management system of some sort? Or you have a form that you use? What are you putting that in?
Yeah, so I think like anyone who wants to build an outbound program should be using a CRM, right? Whether it's Agency Zoom, whether it's a Salesforce, whether it's a captive specific type CRM. I know a lot of Allstate agents will use Allstate Lead Manager or Ricochet. A lot of farmers agents are using Agency Zoom. A lot of independent agents are using Agency Zoom. And it's really just about mapping all of this data to the correct fields inside that CRM, and then making sure that you have a call cadence or like a call schedule to make sure that you're contacting, on a regular basis. And so what we always talk about is it's less about making sure that each individual person has their leads and follow up with their leads. It's more about how can we make sure that this lead gets called 3 times the first day? And how can we make sure that this lead continues to get called for 90 days until that TCPA opt-in expires? Because
well, that was my next question of, do you have these pipelines set up and these call, funnels set up, so to speak? And if you don't mind pulling back, like what does that look like, and the cadence of that? And if I'm stealing some questions, Sid, my fault. But is that okay if you walk me through a little bit of that and let the audience know where you're at on that?
Yep.
Yeah, I'm happy to do that. So I think when we work with any agent through Next Call Club, right? So people will come to us and say, I want to build an outbound program. And whether we're providing the outbound calling or if they just need help with, buying leads or generating leads, the first question we always ask them is what CRM are you using? Because if you're sending a lead directly to like an email or a Google Sheet, the first thing we tell them is, look, we don't want to start working with you and take your money because we don't think it's going to be successful without the right, software and framework to get involved. And so we work with a number of people, and I'm connecting over with Mariah Gates with automated or accelerated automation.
Yes.
Who I know is like an Agency Zoom Orange partner.
Yep.
And they're building out a template, or we're going to work on building out a template for our call cadence for anyone that works with us, right? And we love when people use Agency Zoom, because we know that we can make sure that a lead gets called 3 times the first day. Like that's the cadence is 3 times the first day. Then we call 2 times the second day, 1 time the third day, and then we actually cool that lead off for 2 or 3 days.
Interesting. Okay.
I'm a big fan of not being overly aggressive. I think 3 calls is already pretty aggressive on the first day.
Yeah.
We don't go any more than that, because the more you call somebody, the more likely you are to get blocked. Once you start getting blocked, you're going to have a bad time. Your contact rate's gonna drop, and you're just wasting money. Not to mention, some states have a TCPA law that supersedes the federal law, which says if you call more than 3 times in 24 hours, you're in violation. And then, of course, there's spam flagging, right? So if you're making a lot of outbound calls, especially a lot in a short amount of time, you can be flagged for spam, which, again, will tank your contact rate. So our goal is to call anywhere from 11 to 15 times across 90 days. And the way that it works, like I said, 3 times the first day, 2 times second day, 1 time the third day, we cool it off, and then we'll say like maybe once every 3 days to try to vary up the times and days of the week that they're getting called. And then it becomes like once every 7 to 10 days until day 90. But the reality is that a lot of you start hitting diminishing marginal returns around call 7 or 8, where every additional call is not giving you a lot of extra juice from the squeeze. And so that's where it's really, really important to have a CRM set up, again, whatever one it is, that maybe has a text drip. If you're a company, if you're a captive agent, you got to make sure that you can text through it. But I think, if you're an independent or a farmers, you absolutely can. Or, an email dripped, and ensuring that you're not just shilling them with a price, that you're actually trying to add some type of value, right? Like, why should they want to open your email and get pitched? They won't. They don't want to. It's spam, right? So how can you actually give them some type of information and help to get them the result that they want as a prospect.
Well, that was going to be another question I had. Was you mentioned text and phone calls. I guess you do have email drip campaigns. Do you ever get into social media things with them, and is that part of that, or do you get into any other form of communication that they might
So
use?
what I'll say is, like, with some of our more sophisticated clients, we'll help them set up the email and the text, and we'll even get into social. The reality is that most people who work with us are not there, right? So the first thing we do is we try to crawl, walk, and then run. And so the first key is, like, how can we just get the outbound call cadence set up? Because I can't tell you how many people that I've worked with, and I don't mean this in any type of condescending way, is they'll say, well, the leads suck. And I say, well, what does that mean? Like, what do you mean they suck? And people say, oh, well, there's wrong numbers. I say, well, what percentage of them are wrong numbers? And they're, oh, 8%. Well, that's not a lot, right? 8% of leads being wrong numbers is not a lot. Or they'll say, well, I called them and nobody answered. And I said, well, how many times did you call them? Oh, 2 times. Okay, well, that's not enough, right? We just know that's not enough. Or they'll say, oh, well, they weren't interested. Well, if they're not interested, it's probably because you are not interesting. And so there's all of these types of things. So we always start with calls, then we'll layer in text, then we'll layer in email. Of course, we make sure that they're TCPA compliant with whatever carriers or softwares that they're using, and then go from there. And then social is just one of those things that I think most people are not ready for, in terms of trying to be omni-channel all the time. As we always tell people, is master one channel before you go to the next channel, and then go to the next channel, then go to the next channel.
Yep. So in terms of the automation sequencing, whether it's text or email or phone calls, are you using data to drive how you build those automations and what channels you're reaching out to people on? Or is it just, I can't imagine you're taking shots in the dark. You don't seem like that kind of guy, but...
Yeah. So what I always tell people is that, like, in my agency, for example, we have a lead scoring model that we've built ourselves. We've tried some of the AI machine learning ones. I know that that's kind of like...
Yeah, I was going to say, can we pause and explain to the audience what a lead scoring model is? Because there may be some people who aren't familiar with that term.
So the way that I would define a lead scoring model is that we want to look at every lead that we have and give it a general score that indicates the likelihood of a certain outcome happening. So say it's a scale of 1 to 100, and some people might optimize that score towards a conversion, aka a sale, right? So if I buy 100 leads, how do these leads rank on a scale of 1 to 100 on how likely it is to convert into a sale? When we build our lead scoring models, what we are optimizing for is the likelihood of a conversation or a quote. And the reason that we've done that is because when we first started building our models, we would optimize towards conversion. However, what we quickly figured out was that the highest scored leads, even though we were optimizing for conversion, a lot of times would sit there and contact attempt 6 or 9 or 12. And we said, well, maybe our model's not right here, because everything about this lead on paper looks like they should be a perfect fit for everything that we can offer. But if we can't get them on the phone, it doesn't really matter, right? And so we changed our model to optimize towards a conversation or a quote, for lack of a better term. And what we started to see was that, like, a very, very strong correlation between a higher lead score and a higher quote. And then we knew that quotes correlated to sales at like 93%. And so we kind of backed into it that way. And what we do is we use data to build that model, and we update it quarterly. So we do it manually. And by manually, I mean, I've got, 4 analysts on my team that do a lot of this work, and they're running correlation analysis on all these data points that we capture on a lead or from a lead that we buy, and it gets adjusted every quarter. And what works really, really well about that is that we can just use data to decide, look, like, somebody who is filling out a lead form at 2 a.m. is not very likely to talk with us on the phone, and a lot of that has to do probably with the hours that we work or the times that we are calling them. If somebody's up and filling out a form at 2 a.m., they're probably awake at 2 a.m. And we're not calling at 2 a.m. because nobody's working and it's illegal, at least in our state anyways. And so we use data to drive a lot of those decisions and score on what order we call things in. And the reality is that the lead score doesn't really matter that much when the lead is new or it's like only 1 or 2 days old, because we're going to call all of those leads 5, 6, 7, 8 times anyways. Where the lead score really matters is when you start getting into like your backlog of leads. You have 10,000 leads that have been called 10 times, and you have 300 calls you can make. And what are the best 300 calls that you can make? So for us, we want to know that it's going to be somebody who's likely to pick up the phone and likely to have a conversation. And that's where the scoring comes in. And the way that we build that score is like, again, we just look at the data points, right? And this is one of the best things about either generating leads or buying leads is that you get a lot of, like if you're buying a lead, you end up with a lot of data. If you're generating leads yourself, it really just depends on your form. And this is one of the reasons I always tell people is like, look, I think a lot of people want to generate their own leads. I think that's great. Yes, they can be exclusive to you. You can't control if they fill out another form, but if you don't optimize that form, you just have to remember that the more pieces of information you ask from a consumer, the more likely they are to abandon the form and never submit the lead. And so if you're buying from a major lead company that has 30 engineers from, Harvard or MIT and they spend $200 million a year on Google and search and display, and they're getting 50, 60 data points, that gives you a lot of data to play with, right? So like, for instance, we know, like this is an example in Georgia, we know that when somebody has a metal roof, they convert it like 4 times the rate. And so when we go out and look for leads, we'll spend more to get somebody who has a metal roof because we know they're going to convert. And the reason that they convert at a higher rate is because there's a roof schedule in Georgia, and a metal roof has a 50-year life where a shingle roof has a 20-year life. And so the more roof life you have left, the better your rate. And so sometimes you see these data points and you say, wow, that converts a lot better. And you have to ask the next question, which is why, and make sure it makes sense. Because the biggest problem with scoring leads that most people have is they just don't have enough of a sample size. They have 300 leads and they say, oh, well, these ones are working better. It's probably just luck. It's probably just coincidence.
Well, yeah, I was going to say, back in the day, they would say, you usually get a 1 or 2% return on buying leads. Do you find that number to still be the same with your system, or is it a much more attractive number using your system, so to speak?
So I think return is maybe the wrong label. I think if you look at what is the close rate on leads, like if you have 100 leads, the close rate might be 1 to 3%. I think ours right now is sitting at 1.7 for our agency. That being said, the ROI on that spend is 200-something% plus, right?
Wow. Regardless of how many you buy, you've got those in your system forever. So you could run other campaigns of quoted not sold or no answer. And again, goes back to your CRM, agency Zoom, or any other system for that matter, to keep up with those.
Wait, but is it,
for sure.
Is it legal though to keep those guys in your system if you bought them at some point? I mean, is there a shelf life?
Yeah, look, I think you have to make sure that you're staying compliant with TCPA laws. So once at some point these people have opted in, and if they haven't opted in, you shouldn't be calling them unless you've scrubbed them against a national do not call list, right? So we use a piece of software called the Blacklist Alliance. There's other ones like DNC.com has ones, but they'll integrate directly into your CRM. They have an API. They also have a Zapier option, and you can scrub against a DNC or a known litigator list in real time. And so if you've bought a lead that has explicit and clear opt-in, one, you need software to prove that, or you need to take the lead company's word for it, or if you're generating your own leads, you need to make sure that your disclosure language is up to snuff, right? Whether that's through an attorney or, I would not recommend doing it yourself or through ChatGPT because even though you can do it, doesn't mean that it's the right way to do it. And the TCPA fines can be absolutely devastating. It's one of the few areas where a jury has awarded judgments against individuals, not just the corporation. It's gone through to the owners of that corporation for their personal assets as well.
Wow.
But yes, you have to make sure after like 90 days, you're scrubbing against a do not call list.
Yeah.
And then you could also set up where, and I'm wondering if you guys do this, I'm sure you do, whether they buy or not, do you ask for referrals from them to build your own organic list of like,
Absolutely.
These are, okay, go ahead.
Yeah, absolutely. And building workflows that do that, right? So after you quote somebody or you sell somebody, making sure they have an amazing onboarding experience and then asking them whether for a Google review and then a referral, or a referral then a Google review. And doing that all automatically through automations and drips is how you create a marketing flywheel that continues to feed itself.
So cost of leads and actually quality of lead sources. Do you have you probably can't play favorites. It's like, having kids, you can't pick one, but can you give some guidance to people who are qualifying different lead gen sources and say, hey, here's a couple things to think about, a decision matrix to walk through as you're choosing a couple of these guys, and how many too, right? Do you have a few lead sources that you're working at once? I'll stop there because I want to get into cost per lead too, but
So what I'll say is I think, so Next Call Club and my agency, kind of by extension, we work with 26 different lead providers. And the reason that we work with so many, the way that came about was just because, underwriting guidelines are always expanding and contracting. When they contract, your niche gets really tight. You need to make sure you can find enough consumers, and sometimes you can't get enough from one source. And so, like Next Call Club, we have a lead buying service where you can leverage those relationships and our technology. But if you want to go direct, I always recommend that people understand that every lead company out there is going to have a lot of the same types of challenges. And I think it's not so much that a lead company is bad or they are crooks. I think a lot of people have had bad luck with leads and think that the lead company has stolen their money. They think, and maybe this is true with some bad actors out there, but they say, look, when I first come on board, they give me the best leads to kind of get me hooked, and then they give me the crap over time. And the reality is that it's extremely expensive for that lead company to acquire you as a customer if you're an agent. And so it's in their best interest to keep you on once you get on, right? And the difference between a great lead experience and a poor lead experience is very often your account manager and how well versed they are with data, or how well versed they are with understanding the back end sources. So I'll give an example of,
or how they are with objections. I've had some of my account managers say, they had an objection of, I've already been called by 5 other agents, but if you can teach them how to rebuttal that the right way, I think that's another good thing as well. You keep going. My bad. I just had to add that.
No, I think it's a great point. And so a couple questions I would ask, right, is the first one I would say is, look, do you have a Jornaya lead ID or an active prospect URL on every lead that you provide?
Yep.
Okay, so I am a customer of Jornaya, which is now owned by Verisk. I'm a customer of Active Prospect, and both of those are incredible tools to verify intent, right? And so whether you have a subscription with Jornaya or Active Prospect or not, the fact that they have the URL or they have the token is a green flag. So just for people who aren't aware, Jornaya and Active Prospect, they're kind of like the NSA for leads. So they can see, did you copy and paste your data in? Did you spend 5 minutes filling out a form? Did you spend 5 seconds filling out a form? They can see the IP address in which the lead was created. So sometimes there's these bot farms that will go out and fill out, 30 forms and create fake leads. And not only is that a problem for you as an agency because you're spending money on somebody who doesn't actually exist, or even worse, you call somebody who does exist, who didn't fill out a form, they didn't put any opt-in, and now you have a TCPA violation if they make a complaint. And so a Jornaya token or active prospect URL is a huge green flag. So always ask that question. The next question you should ask is, how many of your sites are owned and operated versus how much are you getting from other people? If they tell you that every single one of their sites is owned and operated, meaning they own the form, they're driving traffic to their form, they're probably lying to you. If you have active prospect, you can see the website on which the lead was filled out, and sometimes you'll get a lead from company A and see that it was filled out on the website of company B, right? So clearly company A bought that lead from company B and then sold it because they needed volume. And so what happens is that all these lead companies have hundreds of ways in which they generate leads, or they'll buy leads from other people. And there's no problem with them buying from other people. What matters is the lead quality. Did the person actually fill out the form, and are they willing to talk to you, right? And what I would just say is that, understanding the owned and operated versus bought, right? It's not about the answer. It's about how transparent are they Second is, do you have the URL or the token? And then third is actually asking if they could give you some of their sites where like a majority of their leads come from, and go through the process and just go through the form and just see, are they asking questions about multiple vehicles or not? So like some people say, I only want multi-car vehicles like on my leads, but then you go to the form and they don't even ask how many vehicles the consumer has. And so there's a lot of fraud out there in the lead industry. And so you either need technology to help sift through that and avoid the bad leads. You need someone kind of like Next Call Club to help you do that, or you need to start having deeper conversations with your lead vendors, in a way that they're educating you on the process. Because if you understand the process, going back to the beginning of our conversation, you're going to be much better suited to have a good conversation with that prospect.
It feels more and more. So when we got into this conversation, I thought the data-driven approach was going to be focused on using data to optimize the funnel itself and the automation, which it sounds like it is. But more interestingly, the data-driven approach is also focused on leveraging the digital footprint of a prospect, of an online lead. I mean, which I can't say that I've run into many agencies that are doing that well, mostly because it's a kind of unknown territory, and probably, ethically speaking, like there may be some people out there who feel like, I don't want to be big brothering my, my leads. But this is the world we live in today.
For sure.
Even at Vertafore, we've got technographic databases that allow us to see oftentimes what systems an agency has in the insurance industry. So it's kind of one of those things where you, if you're not playing that game, you're behind.
Absolutely. I think
couldn't have said it better.
There's a lot of crap out there, right?
Yeah.
There's a lot of bad leads, and whether you generate them yourself or you buy them, you're gonna deal with them. And people always ask me, what's your definition of a bad lead, right? It's like a bad lead is a lead that doesn't pick up the phone, or one that picks up the phone and it's the wrong person. A good lead is somebody who picks up the phone and is willing to have a conversation with you. That's a good lead to me. Because I can't tell you how many times somebody hasn't qualified and it's really just quoted improperly, or somebody missed a key piece of information that renders that prospect ineligible, when they're really not.
Is your system set up for true cold calling?
It can go for true cold calling too. Yes, it absolutely can. But here's what I'll say is that unless you are working on very high value accounts, it's generally a huge opportunity cost to call cold. So I'll give you an example. When people come to us for our outbound calling service, what we usually tell them is, look, if you want to have an outbound caller, we'll procure 25 leads a day for that caller through that service. And we expect them to get anywhere from 13 to 16 live transfers to your sales team per day. And they'll say, well, what if I want them to call behind this mail I sent? Or what if I pull a list of people who are cold, or this or that? And I say, look, we can do it, but I'll start to break down the economics for them. And so when you call cold, a good day might be 4 or 5 qualified conversations in an entire day. And when you're buying internet leads, or you're generating internet leads, you might get 13, 15, 16, 17 conversations. And so what we look at is, what is that cost per conversation? And the more conversations you have, the better your economics look, right? Because you're spreading the fixed cost of that outbound employee out across more conversations. And so a lot of times, with the way the math breaks down, is that if you're having 13, 15, 16 conversations a day, even if you're buying leads, you're looking at like $20 to $25 per conversation. And when you're calling cold, even though you're not spending any money, you might be at $60, $70, or $80 a conversation. And so it's really important to make sure you're looking at how the costs move through the entire process, not just like the upfront sticker price.
Right.
Like something I've said to people before is, like, they've come to me and said, hey, like, you're a lot more expensive than this service or that service. And I say, well, look, 2 things. One, we're fully US based. So we do not offshore any jobs. Everything's in the US. And that's just a decision that we've made. And the reason for that is because we just get a lot better results. The second thing I always tell people is, look, if you want to save money, go with them. If you want to make more money, come with us.
Okay, so cost. Go ahead.
No, you were on
No,
a roll.
no,
Go.
you go, you go. I have a question about retention, that's the one that
Sure.
we'll all use to close us out. So you go, dude.
Okay, my thing is I wanted to get into for just a second is a lot of agencies right now listening. It's no secret we're all in a hard market right now, and we're all struggling. I shouldn't say struggling. We're all facing the hard market. Some are thriving in this market. Some are asking the questions of how can I get more leads in the door? How can we close more? If you were to give like a blueprint or a playbook right now for someone listening to say, I want to start doing some of these things that Andrew's talking about, could you high level in just a few seconds or a few minutes just tell them where would you start? What would you do? Just to give our audience kind of a playbook, so to speak, so they can walk away with something from Andrew.
Sure
Other
thing.
than what you already told them, obviously.
Yeah, sure thing. So the first thing I would say is look at the markets you have, understand what you get paid on them, and then think about, is there anything here that somebody's ignoring? And so I'll give you an example of this. And so I remember 2018, 2019 in Florida, we had a market for mobile homes that was paying 14% commission on new business. And I saw that and I said, everybody I always talk to excludes mobile homes. And so I said, And so I said 14%. I said, what's the average premium on this? The average premium was like $2,300. And I said, okay, so premium's strong, because at the time in Florida, the average home premium was like $1,300. Now it's like $5,000, right? So only a few years ago. Something that's above average premium. The commission rate is 14%, where a lot of others were paying 10, 11, 12. And third, I said, it's something that I think everybody ignores. And so I went to the lead vendors that I worked with and I said, look, what if I give you like $1 for mobile home leads? And they're like, well, that's a lot lower than we would normally. And I'm like, do you have anyone buying them? And they're like, no. And I'm like, cool. I was like, I'll take 200 a day.
Oh my gosh.
I'll take everything you've got.
That's awesome.
So that was like a big part. And we were writing hundreds of mobile homes, right? And I think a lot of people, at least in the Allstate world, didn't want them because everybody was trying to write an Allstate product to get to the Allstate scorecard to get to the Allstate bonus. The mobile home product was not on Allstate paper, and it was a revenue play. But like I remember we spent like $3,000 on leads and made like $48,000 in revenue or something like that. And so the takeaway from that is we are in a hard market, but I guarantee you there's somebody still writing business somewhere. And an example of something how we've applied this is I have a client through Next Call Club using our lead buying service, independent agent on Agency Zoom in Louisiana, had a conversation, and I said, do you have anything that's kind of maybe tough to write, but you can still write it? And if you do write it, it's big. And he said, in South Louisiana, because it's coastal, we have some homes down there that are like 5, 6, 7,000 in premium. And so we did it and we started getting him volume, and voila, it's something everyone else is ignoring because it's hard to write. But if you can get the lead cost right, it can become an amazing ROI play. And so first thing you should do is look at all your markets, figure out, what's the lifetime value. I know that sounds crazy. It's really not that hard to figure out. Take the premium, multiply it by the commission rate, and then multiply that by the number of years that you expect them to stick around. If you don't want to do that math, use 7 or 8 years as a rule of thumb. Unless your retention's in like the 60s, that's probably fairly safe. And then see if you can attack that market, right? So that would be the first thing I would say. The next thing I would say is really manage your lead cost. I am not a big fan of paying more money for leads, right? You should try to get your cost per lead as low as possible without degrading contact rate. And so some people will buy an exclusive lead and pay $30 for it or $20 for it, or pay that much to generate it. But are you getting compared to a shared lead that you got, from an EverQuote or like a Quote Wizard for $5? Like, are you converting that at 6 times the rate? Because if you're paying 6 times the price, you need to convert it at 6 times the rate. And the reality is usually not. And so you got to get your lead cost as low as possible while maintaining that it's a real-time consumer opting in. You can buy leads for a penny and it's just a list. But find a real-time consumer filling out a form and get that lead cost as low as possible. People will say it's a race to the bottom. I completely disagree. You have to use data to make sure that contact rate is not degrading as that cost per lead goes down. Not every lead is created equal. But really, and I say that, which I have to make sure I qualify with this last thing, is it's really not about the cost per lead. It's about the cost per acquisition, and at the end of the day, the lower your cost per lead, all else equal, the lower your cost per acquisition, so you just got to make sure that all else equal holds.
Yep. Okay, so
It's almost like I relate to buying Kraft macaroni versus buying off-brand macaroni. Anyway, go ahead.
Not quite. Maybe Annie's, right? Those next call club leads are the Annie's.
That's organic macaroni.
Annie's is legit.
Yeah.
Yes.
Shaped like bunnies even. Come on.
Oh, Annie's the best. All right. Go ahead, Sid. You had some good questions there.
Well, I want to address the elephant in the room. And I'm sure a lot of people were probably thinking this before they hit play on this episode. There's definitely a judgmental bias around internet leads.
Sure.
There's discrimination against internet leads, right? And it may not be, even if people believe in the upfront success, they can create a great automation, they can call down on these leads, they can get a low cost per lead, they can lower their cost per acquisition, their cost per conversation's great. On the back end, these shoppers are out the door within 12 months or 6 months because they're price shopping, right? When you've used this model to build Peachy Insurance, I mean, the agency seems to continue to grow every year. You've built a $36 million agency in 5 years. I mean, it seems like the proof is in the pudding there, but I guess if you were to look underneath the hood, are we seeing a spinning hamster wheel there, or do you keep people for a while? Do you retain those customers?
So here's what we see is that my agency right now has an 87% retention rate.
Yeah.
So 87%, which puts the customer life just shy of 8 years.
I really
So
appreciate.
7.7
I feel
years.
like sharing retention rate is like like going into someone's underwear drawer in the insurance industry. Yeah. So thank you, Andrew. I appreciate it.
Yeah, absolutely.
This is a family show, Sid.
I'm sorry.
So
you go.
just shy of 8 years, and I've heard this tons of times, right? When I first came in to Georgia with a scratch agency, I was doing internet leads, and everyone said, "Oh, like they don't retain. Oh, they're low lifetime value. Oh, this. Oh, that. Oh, this. Oh, that." And I think a lot of it's just an excuse as to why people don't do it, instead of owning the fact that maybe it's a little bit harder than what you're used to, and maybe you haven't figured out the process. Because I can't tell you how many people have said that to me. And I just say, look, like that's not been my experience. And don't get me wrong, like I've done, self-generated Google click to call. I've done Facebook ads. I've done direct mail. We've got referrals. And what we can see is that the worst retaining marketing source that we have is Google click to call, like by a wide margin. And I think a lot of that has to do with easy, like kind of like it's somebody who needs it in a pinch and just kind of moves on. Direct mail, people always say, oh, direct mail is so much better. They retain so much better. For us, it's 1% better. That's really not enough, considering that our cost per quote on a internet lead is like $20, and our cost per quote on a piece of direct mail is like $100.
Wow.
Right? 1% difference on retention. And what I would say is, think about our lives as consumers, is that like we are hit with ads inundated all day long. Like if I sat down and counted how many ads I see on a daily basis, it would probably be thousands of them, right? And so you have to be careful that if you're writing business, that even if you're working internet leads, that you're still building value with you as the agent or you as the agency, and having like an effective onboarding process. Where a lot of the retention drop off comes for us on the internet leads is in the first 6 months. And it's usually because we didn't set an expectation, or we were unclear about how the payment worked, or they didn't get forms back or something like that. But they've been just as sticky as everything else. And I think people sometimes ask me like, what's your number one regret? And people say, I don't have any regrets. I have plenty of regrets. And like one of mine with the agency is I didn't start worrying about or focusing on retention processes until like year 4 in the agency. And I wish that I would have started sooner, because I think I'd probably be like in the 40s in terms of size now, because I think that retention for the most part is driven 70 or 80% by rates, which I cannot control. And so when rates go up, I need to make sure that we have a value proposition other than price. And I don't care if somebody calls you off of mail, or if they are referred to you, or if they're clicking a form on Google or filling out a form. Is it what causes everybody to shop for insurance?
Right.
It's price. It's price, right? So we have to, that's going to be the number one thing we have to get through, no matter what marketing source they come from. And so I don't think that internet leads are inherently a problem. I think the lack of processes on converting those internet leads or keeping those customers is the problem.
Yep.
I mean, that being said, right, like we did a home show recently, which we don't do a lot of stuff on, but like there was plenty of people who were like, oh no, I've been my agent for 20 years. Like those are the people we want the most, right? So how do we find those people if they don't shop? I'm not the person who's going to say do everything with internet leads, but there really is nothing that scales better. And there's nothing that can be more targeted, especially in a tough market like this, than internet leads.
Yeah.
So.
I love it. Man, thank you so much for coming on and
Very
sharing the secret sauce.
Of course.
If someone's interested, which I guarantee you there is someone who is listening to this saying, all right, we got to dig in and figure out how internet leads work. Next Call Club seems like a pretty good first step. Can you give a general overview on how Next Call Club works and then a call to action on how they can get in touch with you?
Yeah, for sure. So we have kind of two main services. The first one is our outbound calling service. So US-based outbound callers as a service. We handle it all for every agency. It's completely turnkey. It's really just an employee lease program, but you're also getting, me and the rest of the team. There's 7 of us. We're growing every month in terms of how much help you have. We put you into our Slack channel where you have access to us, where we help you train, do all those things, right? The goal is to make it easy for the agent or the owner to build an outbound program and not feel like they have to figure it all out on their own. And so outbound caller service, we, again, handle it from start to finish. The lead buying service is, basically you're able to leverage our relationships with the lead partners and all of our technology like Jernaya and Active Prospect and Blacklist Alliance.
Awesome.
And,
so you get all the data.
Wrestle.
Yes.
Yep.
Okay. And you teach people how to use the data from all these sources.
And a lot of times we'll just do it for them, right? So like if somebody specifically has agency Zoom, like we cheer because we will build a dashboard that taps right into the back of it and updates in real time. And that's just something we do for all of our customers if they want it at no extra charge. So
that's awesome.
That's how Next Call Club works. You can get us at www.nextcallclub.com or I'm super active on LinkedIn. I know a lot of agents are on Facebook. I'm there too, but on LinkedIn, I try to post every day. I try to add value. But I always tell people this, even if you aren't ready to buy something, or even if you don't want to buy something, but you are curious, reach out to me, shoot me a message, add me on LinkedIn. I'm happy to give people some advice or some of my time. I've gotten so much help over my career. I've had so many great mentors, whether they meant to be a mentor or not. I'm happy to pay that forward. So please reach out to me.
Okay. So speaking of paying it forward, since we're there, to make this easier, because I know there are agency Zoom agents who are listening to this saying, oh my gosh, this just seems like a dream team. Yeah. Would you be up for doing a deep dive on a webinar? Walking through,
Absolutely.
We could look at an agency Zoom.
Oh, this is recorded, so you're locked in now.
I know. That's what I'm saying.
Perfect.
It's like, be careful, man.
You nailed that, Sid. Way to go.
No, that would be awesome. I'll bring one of our outbound caller managers, and then I'll also bring one of our analysts to kind of show through how we look at data, how we use our own data.
That would be
we have no
so
problem
cool.
showing under the hood.
Yeah. That would be amazing. So cool. All right, perfect. We'll circle back on that here in a couple weeks.
Well, if you sit here quiet enough, he'll offer more, Sid. Hang on, let's just sit here quiet and see if he offers more.
I'm going to drip it out. Can't give you all the good stuff all at once. We'll do it right at the end of the webinar.
This is a slow play. There's a nurture campaign going on here that we didn't even know about. Yeah.
And I'll call you about my Mercedes, my Lambo, and whatever the other cars you made up later.
Yeah, well, I'm not on the policy anymore, so whatever, man. That's just,
We'll get your Jeep back in there. Don't worry about it.
All right, Andrew, thank you so much for coming on.
Thank you,
yes, it was great to hear what you're up to, and I can't wait to hear more about, we'll have to catch up in a couple months and hear more about the successes from Peachy Insurance and Next Call Club.
Thanks so much, Keith. Said, great talking with you.
Well, that was a great episode.
Amazing. It was an amazing episode.
I really enjoyed that content. Guys, if you enjoyed that content and you want more of it, make sure you hit the subscribe button.
Nah, dude. You got to tell them to crush it. Crush that subscribe button, guys.
All right. Whether you want to crush it, smash it, hit it.
Bop it?
Sure, we could bop it. Either way, guys, we don't want you to miss another episode. We enjoy spending time with you, the VIP.
Yeah. We'll see you next week.